Hi, this is Shwamya Sarkar from Wealth Redefined. So today we will be discussing about how step by step we can build a mutual fund portfolio. The first thing which comes to my mind is know your starting point. You should actually know that how you will start that. It cannot be an abrupt movement. Most important thing is your income, your expense and your savings without compromising your life. So if you are saving too much, then probably what will happen is that you may start compromising on your lifestyle. If you are saving less, then probably you are overspending your money. If you know what is exactly your income and what is exactly your expenses, then you can come conclusion at the savings part. And if you know the savings, then you can obviously move your savings into different instrument. One of the instrument is mutual. Second thing which is important is defining your goal. If you do not have a goal, then you do not have a destination. A ship without a destination is just running around. So that is the reason if you save the money, you should save it for a particular reason. The reason can be various. Maybe an international destination visiting, maybe a child's education, maybe for retirement planning, maybe for marriage planning, maybe for buying a house or a car. But definitely there must be a goal. If you have a goal, then you can start working towards it and start saving the money for yourself. Third thing is understanding your risk appetite. A lot of time people just follow the goal and try to reach the goal very fast. They always undermine the risk appetite. Risk appetite means you know what kind of risk you would like to take for what kind of return you would like to make. Everybody chasing return in this. But if you do not have a risk appetite, you may fall flat when the market doesn't give return. So that is the reason it's most important that you should know risk appetite. You may not be a high risk taker. You may be a low risk taker. But even a low risk taker, you can reach to the goal if you have adjusted your risk as per your profile. Or you won't get disturbed or you won't get disconnected with the funds if you have been proper risk appetite analysis and done. Fourth important thing is that choosing your fund wisely. Why you should choose your fund wisely? Because if you are looking for a short-term goal, you must find the short-term funds. If you are looking for a very long-term goal, you may find the long-term funds like equity funds, mid and small cap funds or that kind of funds. Don't go only because of the past performance of the fund. Choose the fund wisely because every fund has a cycle. One fund which is the top in 2022 doesn't mean that it is still topping. Maybe it has fallen down. So you need to choose the fund wisely. You need to see what kind of investment they do, what kind of philosophy it has, and what kind of return can generate at different period of time. So that is very important to reach your goal. If you choose a fund which is very low return based and you are trying to reach the goal faster, it won't help. Or if you try to save your money and reach the goal faster, then probably you are in the wrong fund. So you have to choose the funds wisely so that you know that where you are heading and how much time it will take to get into those things. Fifth is that do your admin work in terms of mutual fund investment. Do the KYC, profiles and all those things after choosing the funds and everything, and you start investing the money. The sixth most important part, which I feel, is that portfolio review and rebalance. Sometimes what happens is that your goal changes. Sometimes your money flow changes. Sometimes your fund doesn't perform. That you choose a fund, but that is actually not syncing with your risk appetite or syncing with your goal. You need to rebalance it and review it. If you review it with a proper guidance and review it with a proper understanding, I think you may reach the goal sooner or later. Only thing is that rebalancing and reviewing the fund after a particular time is very important. Once in a year or twice in a year is good enough to do this. This will help you to regain your portfolio if it is not working. And it is better that if you take a professional help if you do not know to review your portfolio. Thank you for watching this video. We will come up with this kind of video on a regular basis. Please like the button, subscribe to our channel and send us any comments if you have.